Thanks very much. Okay, ladies and gentlemen, if I could just ask for your favor, please. Today is going to be an interactive session, so I'm not going to start with who I am and my background. If you want to know about that, I've got a book, you can go and read it. What I want to do is, I want to get into the nitty-gritty. But before I do, can I ask for your favor, please? Can I take my jacket off? Do you mind? Sorry, I don't know how to work hard with a jacket on. Real estate for me is all about getting down in the trenches. We're going to achieve three things today. The very first thing I want to achieve is why. The second thing I want to achieve is how. And lastly, once you understand all of that, is what. What do you do? And so, without further ado, what I wanted to share with you a little bit was just why from our perspective, in terms of who we are, what we do, and most importantly, why we do it. Nelson Mandela said, money won't create success, the freedom to make it will. But I want to share with you a much more personal story. My father in 1995 actually left Rainbow Chickens, and he was financial director at the time. He always wanted to work for himself, and so he finally went on his own. He took early retirement, he was paid out 500,000 Rand, and my father took it along, he gave it to a financial planner, and 10 years later, unfortunately, my father passed away. And my mother was paid a spectacular return of 490,000 Rand. So I sat with my mom and I said to her, look mom, it's very simple. If you took the average house price according to the Absa Housing Index in 2005, January of 2005, January of 1995, it was 166,000. You'd taken that 5 houses, put on 100,000, you would have had a 40% loan to value. Today, 10 years later, she would have been earning 107,000 net. I specifically say net, that includes management fees and everything else that's sitting on your butt. Her value would have been 2.7. Slightly better than the 490,000 she got back from these sophisticated models and clever people. Today, she would have been earning over 2 million net income. And lastly, the value would have been 5.35. I had another person who was very close to me, and it was an uncle of mine. Now, my uncle decided not to rely on other people. He decided to go out and understand the stock market. And what was quite interesting with my uncle was at the age of 30, he opened his first offshore bank account. Half my family is Zimbabwean, and so with that offshore bank account, from what he earned, he started to put some of his money overseas. And in 2003, he decided at the age of 53. Now, for those of you who've looked at immigration, 53, it's quite difficult to get into Australia once you're 53. But at 53, he bought his way into Australia. He bought a house for $1.8 million cash. He put his kid through a private school. And most importantly, he retired and didn't have to work for an Australian. For me, the important lesson from life and why we do what we do and why we're so passionate is that we just want to give people the freedom. We don't care what you want to do, we don't care where you want to live, we don't care where you want to go on holiday, we don't care where you want to send your kids to school. But what we do care about is you having the freedom to make the choices that you want to make. I embarked on a property career at a very young age. That was my first project when I was 13. I did my first property development at the age of 22 in Cape Town. I did my first London property when I was 24. I learned, interesting enough, reading Dr. Dolph DeRosa's book, Real Estate Riches, on how to create value. And by just putting a little conservatory on, that property from 2003 has netted me over £1,000 per month. Because we turned a 3-bedroom house into a 5-bedroom house in London. We decided that it was very, very difficult to invest internationally on our own. And so we started a company. We've helped thousands of South Africans invest in South African investments, UK investments, Australian investments, American investments. And a lot of people think it's residential, but we've actually just closed on that portfolio, which is a $16 million commercial portfolio in America. But the big question is that it's not just about real estate. In 1998 at UCT and in 2001 in London, I wrote my dissertation on how IT, or computers, could revolutionize the construction and the property game. I did my dissertation on how we can take an old disparate industry, redefine it through the use of web technology, increase global reach, partnerships, and efficiencies of scale. Now today, in 2014, these words are fairly You're used to most of them. But back in 1998, that was fairly unheard of. But why is it so exciting? We've spoken quite a lot about it today, you've heard it come up. But there are three major disruptive forces that are all colliding at the same time. It's a tsunami of change. The first one is the transformative power of technology. In English, that means look at the internet and the platforms it creates. People used to go to shops to buy stuff, now they go to Amazon. Internet has created the platform. The second one is the adoption of technology. Most people started out using the internet to find a date. Then they wanted to share information. Then they started to buy airplane tickets online. Then they started to do internet banking. This step still eludes my mother, who thinks that she's going to get robbed. But the final step is where we start to use and invest online. And the third one is the regulatory change. Dr. DeRuis spoke about the Jobs Act and what was passed in September last year in America. Interestingly enough, most people think America was ahead of the time. It's not. There were 10 other countries that had already passed laws and legislation. And something that I find incredibly interesting is that I thought this industry was going to have to be dragged into the new technology. And yet the world is floundering. Governments are floundering to make sure that their laws and regulations are in order. Because the private capital of the world is looking for the best investment opportunities. And whether or not your country has the right regulation or not will not stop investors. Dr. DeRuis spoke about the Arab Spring. That was the Arab Spring of politics. This is the Arab Spring of investment. The big idea is crowdfunding. And in simple terms, it allows the best people to attract the best capital. And it allows investors to get access to the best opportunities worldwide. Now, a lot of people think it's a brand new idea, and it sounds hell of a confusing. Well, in South Africa, we understand it better than most people. In South Africa alone, there are 80,000 stockpiles in this country that already have 1.2 billion US dollars under management. We all know about the synagogue, where a lot of business has been done. And a lot of you don't know, but there's, and I can't pronounce it exactly, but there's a way in China, an old ancient Chinese tradition called Biwai, which was also ladies coming together, putting their money together to collectively invest. But there are three things that are different behind the current investments we offer today and what these old ancient traditional ways of investing are, but it's with the use of technology. The first one is trust. Dr. DeRuis referred to trust and how important it is. Who here has bought or sold anything on eBay or bid or buy or anything like that? Okay. So I love my rugby. In 2003, I spent £11,000 on eBay buying Rugby World Cup tickets to the Australian World Cup, and I lost it. I learned pretty quickly how eBay works. And very simply, to give you a quick crash course in eBay, when you go and buy something, so say this is a pair of tickets, and you can't really read this on the right, so I made it bigger. I've never met this person, but 7104 Leslie has done this 974 people. He's done 974 transactions, and he has 100% positive feedback. You cannot buy that. It is impossible. I might never have met 7104 Leslie. It doesn't matter. I trust him to buy tickets from him, because his social proofing is more important to him than one transaction to me. Equally, on the other side, he as the seller can look at my track record and see if I'm going to deliver. Now, for all those property developers out there that have an impeccable track record, this is very good for you. For all those property developers out there that believe it's only as important to how big your marketing budget is and how good your next launch is, and whether you look after your clients and your follow-through, this is very bad for you, because your track record will follow you. The beauty for us as investors, and for those people that have a good performance, is that you will attract people without even having to meet them. The second one is transparency. If you go onto our portal now, there's only 4 steps. The first one is that you sign up. The second one is that you can select an investment based on what you're looking for. The third one is that you do the entire transaction online. I was told by a lawyer many years ago that we'd never be able to buy real estate online. They were wrong. We can set up a bank account in America. We've done it here in South Africa live in 6 minutes, and you can transact online. And lastly, and for me the best part, is that anyone that owns real estate in more than one geography will know how difficult it actually is to own properties in Australia, England, America, South Africa. Imagine if it was all on a digital dashboard that was on your phone. Now, we're not quite on our phone yet, but by the end of this year, we will be on our phone. You will have the complete transparency to be able to see absolutely everything going on with your deal. And the last one is that your interests have to be aligned. And the best way to describe this is nature. If you take a flock of birds flying, that bird up the front is taking the most strain, and the ones on the side are taking the second most strain. So over there and over there. These ones are in a holding pattern. And when these ones get tired, they fall back, and the ones that are in the holding pattern go forward to the front. And it's statistically proven that a bird flying on its own versus a bird flying in a flock can fly 70% further. The question is, in the 20th century, is that that's us up the front, and we're trying to kill the guy next to us and the guy next to us to try and make a profit. Yes or no? Our interests aren't necessarily aligned. And so when we look at the real estate model of today, you've got Joe Soap sitting over there and over there. Joe Soap wants to get wealthy in real estate. So Joe Soap wants to invest in a building, which is that building over there. But he needs to go through an investment broker that's earning 1% to 2%. It tends to go through a fund that's earning at least another percent. It tends to go through a private equity fund that works generally on a 2 and 20 model. And then ultimately there's a real estate broker on a 1% to 3%. And I'm sure if we got creative, we could find a few more fees in there. The big challenge with the model is that there's unequal access. I was really interested in Africa earlier, not? And where crowdfunding is going to go, and someone asked it from over this side of the room, is it won't just have to have $5 million US to be able to participate. There's higher fees. So although these projects might earn you 20% plus IRRs, by the time the return ends up back in your account, you're not seeing your 20%. And lastly, there's virtually no transparency. So my question is, if we look at this red line, what does this red line equate to? It's a beautiful American word I learned in the last 12 months. It's called financial leakage. The beauty with where crowdfunding is going is that Jill Soap wants to invest in a property. Jill Soap wants to invest in a property. She goes direct, she has complete trust, her interests are aligned, there's transparency, and there's no fees involved. You get the benefits of direct investment without the downside. Now some people come back to me and say, yep, but the downside of direct investment is liquidity, yes or no? Anyone? There'll be a secondary market in crowdfunding in the next 12 to 24 months, where there'll also be the liquidity market coming through. And some people say to me, well, how big is this idea? You know that in March this year, I flew across the Silicon Valley and I met some of the best people in America. And I said to them, Dolph mentioned the word Kickstarter, because they were very much still in the Kickstarter phase in America. And I said to the guys, I think it's going to go niche. I think real estate's going to be a big play. And they said they want to charge me $25,000 US to do a report on whether it was going to be a big player or not. Well, in the last 6 months, real estate has raised more money than 3 times all the other crowdfunding platforms put together. And in a recent thing, which was literally done at the end of August, they reckon the market now, by 2025, is going to be between 90 and 96 billion, which is 1.8 times the size of global venture capital. Whether you're an investor, whether you work on behalf of investors, or whether you're someone who provides real estate, this is something you need to know about. There's another thing for us as South Africans that I think is very important, and that is the 5 dangerous trends as to why I don't just personally invest in South Africa. The first one, and I'm not going to spend a lot of time on these because you understand them, but the first one is rule of law. I don't like the fact that I can't get my tenants out of my property. In Atlanta, I can kick them out in 21 days, legally. Political and economic stability, I think, is enough. We don't need to go into it. Wealth preservation. I used to buy copies of the newspaper on when Julius used to get on the front page. I don't need to anymore. I just pick up the daily newspaper. So this is today's newspaper, and sure as anything, he's on the front page. He's also written a book. Who here has read Julius's book? Pedro? 2, 1 person. Okay, interesting. You know, at the end of the day, Nelson Mandela taught us you need to know what you need to know. How can you know what people are thinking unless you've read their books? Agribusiness came out in June talking about the challenges that we've got to our land rights. Now, I'm not going to sit here and try and sound like an expert, because I'm not. But wouldn't you like to know what is actually happening to our land rights? There's 14 laws currently being challenged as we speak that are affecting our land rights. I'm not saying that. That's Agribusiness and AfriForum. Go and look it out, go and check it out yourself. Who would like to get a copy of that report? Yep, I can send it out to you. The other one that I find fascinating is that when people do try and invest overseas, 80% of them lose money. The reason being is they don't have the right information and they don't have the right partners. They jump on a plane, they fly to London. I hear it all the time. I'm going for 3 days to buy a good property. Cool, how did that work out for you? Doesn't work. You know no difference to if an American from Atlanta flew down to Johannesburg here, said they were here for a week and they're going to find a good opportunity. Is it possible, yes or no? I mean, Emilia spoke about how we've got to get our boots on the ground. We've got to fly into Africa to find the opportunities. And lastly, our currency devaluation. It's interesting what Etienne went through this morning from an economics perspective, because, I don't know, certainly with my own personal investments, I find it slightly different. When I look at what's happened since 1990, the rand is just against the US dollar. And interestingly enough, if you think this is bad, we went Singapore, Dolph and I, about a month ago, 6 weeks ago, and the Singaporeans were, why would I want to invest in the US dollar? Is devalued 72% against our currency. So this isn't even a very good benchmark to be working with. But 5.6% since 1990. More than 6% over the last 30 years. Last year alone, we lost 24%. Now, as Henny, one of our business partners, said, he's worked for 30 years, and everything other than what he earns overseas, he lost a quarter of his wealth in 1 year by doing nothing. Love me, hate me, but those are the facts. There's a guy that I would highly recommend called James Painter. I've been following him since 2005. All he does is currency. And he tracks where the rand's going in the short, the medium, and the long term. We did an event in March last year. The rand was sitting at 8.86 to the dollar. And he said that it will go over 10 rand to the dollar within the next 3 months. And I asked him what the probability was, and he said 90%. Within 6 weeks, it went to 10.20. And of the 202 people in the room, only 20 people took action. The other 180, as Dolph said, sat there and went, what happened? But he just told you with a 90% probability what was going to happen. And I've been following him since 2005, and his stats to date are over 80% accuracy, which is good. Where does he think we're going to be in the medium to long-term future? Which is about an 80% probability of us going to 14 to 21 to the US dollar, and a 20% probability of it taking a little bit longer. But 100% probability of it happening. So we created the Global Wealth Index, which ultimately helped us as South Africans decide what is happening. It's the same as your CPI. And when you look at our Global Wealth Index, and I'm not going to go into the numbers, I've described exactly how we did in the book, but our wealth is devalued by 29.5% year on year for the last 30 years, compounded. And then the last two things I would say on it is that I'm not sure who read this article recently in the Business Day about BHP Billiton, Rio Tinto, and Anglo American wanting to divest out of South Africa due to electricity shortages, labor unrest, weakening currency, and uncertainty, government uncertainty. Unfortunately, I don't like it either. I'm also a passionate South African. But I'm also realistic. Because half my family's from Zim, that used to be our wonderful farm in Zimbabwe. That there was our house, that there now are the current tenants. They don't have the title deeds, because I do. And that used to be our dairy farm. And the only reason I show you these pictures is that we as a family learned a long time ago not to guess. I'm reading a fantastic book at the moment about Warren Buffett and George Soros. And both of them, their entire investment strategy was built on what they learned when they were kids. George Soros grew up in 1944 in a Nazi-occupied Hungary. That's why these things are important to me. You need to be able to look at your scenarios. So that's why we do what we do and why we're passionate about where we are. But the next question is, how do we do it? Because investing overseas is not for the faint-hearted. And in simple terms, the best advice I think I could give anyone is to look at long-term trends. Robert Kiyosaki, spoke about it in this book here, which is The Conspiracy of the Rich, which is a very good book if you want to understand the global financial crisis. He said the easiest way to get wealthy is to follow long-term trends. But there's a guy that I think is even better. Who here has heard of Jim Rogers? Who's Jim Rogers? Who is he?
Well-known investor.
Well-known investor. Okay, so he's the business partner of George Soros. They started the Quantum Investment Fund in 1973. He retired at the age of 37. He got on a bike and he rode all over the world in 1990. He's got the world record for traveling the most countries. And he spoke about in this book the trends that one needed to look for. I had the privilege of meeting him now when I was in Singapore. And I found it absolutely fascinating learning from a man that for 4 decades has called the grind. He called the commodity, created the commodity index within 3 months of the bottom of the market in 1999. He called the global financial crisis and the banking crash in 2007. He was the very first person in the hedge fund market in the 70s in America to be investing outside of America, not in America. Now my question is, would he be valuable to know what he's thinking and where the trends are going, yes or no? So I'll just give you a quick little game. What country do you think he thinks is the best one to invest in the world right now? And the people who had my breakfast last week are not allowed to stay.
China.
China? India? America? Indonesia? Indonesia? No?
Mongolia.
Mongolia? Ghana? Okay, so most of you will know it as Burma. It's better known as Myanmar or North Korea. And I don't have time today to go into all the details, but to be honest, it's got to do with macroeconomic policies, and it's all in his book there in terms of why you should or shouldn't be looking there. The one country in Africa that he thinks very highly of is Angola. And the bit of advice I would give you is he said, get yourself someone to teach your children Mandarin. He lives in Singapore. He said to me, at the beginning of the 1800s, if you were a clever man, you would have moved to London. Because for the next 100 years, it was the British Empire. In the 19th century, you would have moved to New York. Because for the next 100 years, it was America. And today, you would move to the East. Because the next 100 years is the East. So, this book, which is his latest book, I can't recommend more. It's called Street Smarts. Everything I've spoken about in terms of the different countries, but just to give you some highlights. One of the things that he said, if you were looking to invest in America, the one thing would be in agricultural land, the other one would be in oil or fracking, and the third one would be in medical. 16% of the GNP in America is in medical. Another piece of place to get the right information is MIPIM. Has anyone here been to MIPIM? What's it like, bro?
Grand show times 1,000.
Rand show times 1,000. So, MIPIM is the biggest property event in the world. Last year, it's actually been going for 25 years. It's based in Cannes in France. And there were 2 major lessons. Henny, our business partner, was there this year. There were 2 major lessons that came out of MIPIM. Firstly, the time for organic growth is over. The only way to do it is through partnership. And to be fair, media spoke about that as well. And the second thing, the 2 major trends that are coming out around the world in terms of opportunity right now are medical and residential in specific markets. But once you have that information, what do you actually do with it? we've got a system which we refer to as GIDS, which is the Global Investment Due Diligence System. But in simple terms, I'd rather just tell you a story. So many of you would have seen Clem Santa speak about his scenarios. Most of you would have gone and listened to him and thought that's very interesting. But did anyone walk away and create a system on how to take his scenarios and be able to make investment decisions for your life? You see, for me, I watched Clem speak at least 5 times, and about 2 years ago, it was actually one of Neil's events, and I heard him talk again, and I made extensive notes. And I thought to myself, it's pointless me just hearing the scenarios. I need to be able to have a system to be able to analyze so that I can make educated and informed decisions. So I created a system. I was too scared to share it with Clem. It took me about a year to share it with him. And it was September last year that I shared it with him. And he actually was pretty impressed and made me write a book on it, which is what the whole book is based upon, to help you make educated, informed decisions. But in simple terms, Clem talks about a flag system. If you go down to the beach and there's a white flag showing, there's a shark in the water, and you do not want to surf. Now, I know Joburg, you guys might not be aware, so that might help you out next time you come to the beach. Okay? I don't have time to go into all the details, but there's 4 global scenarios which are going to play out. And again, you can go to their website, Mind of the Fox, or you can read chapter 4 of the book. But what we did is we then created a 4-dimensional model. And based on those 4 scenarios, which countries would be better based on the economics of where they're going? Also, what would be a better asset class? Then we look at South Africa, and they've got 3 scenarios for South Africa. 50% is we stay in the Premier League, 25% is we stay in the 2nd division, and 25% is we go failed state, Syria or Zimbabwe. Now the question is, again, what do we do with that? So whether we stay in Premier League, 2nd division, or failed state determines where we should be investing. But one thing that I could give you, which is a good tip from Clem, no scientific formula really works better than your gut. If you are 50% confident about South Africa, then you should invest 50% of your capital here and have 50% offshore. If you're 70% confident, 70% here, 30% offshore. If you're 100% negative, well, kind of live here and have your money offshore. But something that I like to work on is facts. And I just wanted to share with you quickly some of the sources. Now, all of this is in the book, but I just wanted to share with you some live demonstrations, because a lot of people talk a good game, and they tell you where you should or shouldn't be investing. But who here would like to actually know the... So this is the best research worldwide on any of the property markets you want to look at. So I just put up there Australia, Britain, South Africa, and the United States. And for simple terms, we've got the housing price index since 1975. If we look at the price in real terms, you can see what's happened there with Australia and Britain. You can also see what's happened with South Africa and the US. If you look at prices against average income, you can see where the US is in comparison with Australia. If you look at price against rents, again, you can see the stark contrast. And finally, if you look at the percentage change, you can see what's happened. Now, some people say to me, well, Scott, let's just use America specifically. Where's the best place to invest? Well, rather than using your gut feel, why don't you use the best research worldwide? So I've got Atlanta, because we're investing in Atlanta. I put New York, because most of you know New York. Give me 2 other cities you want to be able to check for the last 20, 30 years. Memphis and Orlando. That's be on the list. Tampa, okay. And Phoenix. Okay, they are perfect. Okay, so now we've got the house price index. We've got the price in real terms. You might notice Atlanta, where we're doing a lot of our investments. Price against average income. Price against rents. And the percentage change. People say to me, well, okay, that's America. What about if we were to look here at London or the UK? I'm not sure if you're aware of what's happening with the tax situation in London, but the capital gains tax has gone from 12% to 27.5% for non-residents as of 1 April. The property market is the highest it's ever been. It's actually, London has grown by over 20%. The market, there's so much, the annual rate of growth in London house prices is the fastest witnessed since 2000. This group, Academic Metrics, I highly recommend if you want the latest information. It comes out every single month. You can see the growth there in London, including London, excluding London. You can see what's happening. The growth in London alone is 20.6%. Is that sustainable? What's interesting here is the number of transactions is 85,000. The long-term average is 90,000. So when one looks at the market, the first-time homeowners are going to, most of them are going to be excluded, and by 2032, they reckon that there'll be more tenants than there will be homeowners in the market. You can see what's happening here with housing transactions. Now people say to me, well Scott, are you investing in London? Or, no, I own property in London. But personally, I think the market is very overvalued, which is highly risky. And on top of that, my yields are 2 or 3%, which makes no sense to me. Because it means I'm in a negative equity position straight from day one. And when interest rates are the lowest they've been in 350 years, which way do you think they're going? It's kind of common sense. With 26% of the current buyers being first-time home buyers always leverage themselves to the hilt. What's the next step? And do you think you're going to sell a property with a net yield of 1.5% to an investor? It ain't going to happen. If I take Australia, the best research you can get for Australia is RP data. Where's it hiding? There it is. This again comes out every month. And if you look here, Sydney and Melbourne have been the two hottest markets. You can see there on the graph on the top right corner. Over 20% again. But most importantly in Australia, you need to understand the Australian market. It's a two-step economy. Over 10 cycles, whenever Sydney's gone up, it's taken between 2 and 3 years for the secondary markets like the Brisbane's to catch up. You also need to understand that if Perth is rising, Sydney can be falling and vice versa. There's not one market. But most importantly, investors are mostly concentrated in Sydney and Melbourne because of capital gains. If you're looking for the best investment returns, the smaller capital cities are where you need to be looking. My point of what I'm showing you is that you need to have the right facts. And once you've got all the right facts, we put it into our global property system. This is not based on hearsay, it's based on fact. So the economic risk, the first column, the first one of the 4 fundamentals, is based on all of Clem Santer's scenario planning. The value of the property discount is based on the economist. You then got Dr. Duras talks, one of the most important components in property is your population growth and your supply and demand. And lastly, one that us South Africans don't take into account that often, but we should actually take into account rule of law. Because as an example, in India, the market is really good in India based on the first 3 fundamentals, but there is no rule of law, and therefore on the risk index, it falls down. And on the return index, the biggest way for us to manage risk is when we focus on income. Those people who focus on capital growth, it is only a matter of time when you bet against winter, when winter arrives. And so we give income a 70% weighting, with capital growth only a 30% weighting. That's why I would far rather get a net yield of 8% in Atlanta, even if my capital growth was a third of London, than 2 or 3%, well, 1 to 2% at the moment net yield, based on the risk weighting. And that allows us to come up with a matrix, not based on gut feel, but based on facts, as to where people should or shouldn't be investing. Now, that's not forever. That's based on the stats and the research as they are. The one thing I will say to you, anyone that invests overseas for a passport is pretty much bound to lose money. I've yet to find one country on this planet where they give you a passport and a good investment in the same boat. It doesn't exist. You can read chapter 10 of my book. I've analyzed 16 different markets where you supposedly think you're getting a nice investment. It's like a boat. It's nice to have, it costs you money. How do we choose our partners? It's quite interesting. Amelia said that if you want to get into Africa, you need to be on the ground. One of our business partners, Henny Besainhout, is currently, 2 weeks ago he was in Kenya, today he's in Zambia. He builds medical hospitals. He's done it since 1992. That's a picture of one that he's building in Bloemfontein at the moment. He's currently building 14 hospitals just in South Africa. Now, as a matter of interest, if you were wanting to get into medical, and this is what I love most about crowdfunding, would you want to invest with me, who has no idea and has never built a hospital in my life, well, I've got a good idea, I'm going to build a hospital. Or would you like to build and invest with someone like that that's been doing it since 1992? Make sense? So for us, when we look for partners in the crowdfunding space, firstly, they've got to have extensive experience. Secondly, they've got to have a niche. We don't want someone that does everything. Henny does medical. I like that. And thirdly, is it scalable? There's no point in building a building in Manhattan, learning all the mistakes, and then not being able to replicate it. So what do we actually do? The last part. Well, the thing that really, really excites me is that I'm passionate, and as the team, we're passionate about helping people invest in international property. But what makes us different is that that's all we do. We're investors helping other investors invest in property. Our combined experience just on the investment committee is 227 years. The number of investments, over 10,000. The total value of investments, 1.32 billion. We've invested on 5 continents. We've had 19 books, 17 of them were golfs. We've got full compliance. We've got our SEC compliance, which is the #1 regulator worldwide, in May. But I think what's most important is that the biggest challenge and the biggest risk you've got in crowdfunding is that there's a lot of young IT guys that are getting into crowdfunding that are providing platforms. And unfortunately, they don't know anything about property. Rather than using the word due diligence, they use a new fancy term, like in the .com, .boom, .bust era, called curatorship. Now, anyone in the property industry, I don't know what curatorship means. We do due diligence. Am I right or wrong? I think this is a major risk. I think crowdfunding is a spectacular opportunity, and I think we're going to see a spectacular pop. And the point is that you need to know that the people you're dealing with are actually real estate people that are embracing technology, not technology people trying to make money out of real estate. In terms of where the market's going, the biggest opportunity worldwide is out of Asia. That is where the money is. The most foreign direct investment is coming out of Asia. Amelia spoke about it this morning. For us, within 6 months, our global real estate marketplace will have a presence in all those markets. And yes, South Africa is down there, and yes, South Africa will be up and live by Friday. Who thinks crowdfunding is legal in South Africa? It is. We've cracked it. And on Friday it's live. We started off focusing primarily in the US and South Africa because we had the opportunities for partnership and our GPS at a macro level. That's where we wanted to invest. Our next step, we've done a huge amount of work in Australia. And so we're reopening Australia, and our Australian portal will be going live in the next month or 2 if Brendan will just work a bit harder. The UK has always been a market. I personally don't want to invest in the UK. That doesn't mean that most people in Southeast Asia, South Africa, the UAE, and everywhere else still want to invest in England. We might as well provide them with a vehicle to do it. But our real focus, for our perspective, is on Africa and Asia. We believe that's where the biggest opportunities actually lie. And lastly, if we've got time, we'll look at South America. But it's a market that we don't even know where to get started, to be honest. To give you an idea of just some of the stuff we've invested in. I've got my stopwatch there, just some of the stuff we're doing. You've got direct properties in some of the best markets in the US. You can buy a house like this ranging from 100 to 160,000. It's 30 to 40% below replacement value. Net yields of 8 to 9%. You can get financing of 50 to 80% LTVs. 3-year leases. And the beauty is what we're doing is effectively a blind raise, where people now can either buy that direct, so they don't want to get involved with other people, or we're buying 10 at a time, and people can actually have the diversification. You might have noticed the 3 major trends we spoke about were residential, medical. What was the third one I spoke about? I mentioned it. Oil. The second one is oil. When you go to America, most people don't know where North Dakota is. In fact, Jim Rogers was blown away that we'd even been to North Dakota. Do you know that Henny and myself just alone have been in North Dakota 5 times? Now, has anyone here been in North Coast? Just my interest. Okay, well, the guys that have been with us, fine. There's someone in the back who hasn't been with us, which I'm very impressed by. And anyway, it gets like minus 40 degrees in winter. As a Durban boy, that doesn't rub so well for me. But the point is, the most important point with North Dakota is they are bringing 1 million barrels out a day now. Texas is only bringing out like 1.2 million barrels. They've got 140,000 wells in Texas. They've got less than 10,000 wells in North Dakota. What is happening here is amazing. And what we're doing is we went along originally to look at building houses, then we looked at doing A-grade office. We decided after over a year of due diligence it wasn't the right market. But light industrial is the right market. It takes 30 men to put a rig in the ground, and it takes another 3 men on an ongoing basis to service that rig. All those people drive semi-industrial trucks that need to go and service it. They're all blue-collar workers, they need light industrial. So we're rolling out light industrial factory lets. And interestingly enough, a lot of people will recognize that gentleman, Yanni Millman. Him and his brother and Henry Benjamin just came on our last buyers trip. Because like Amelia said, I think the best knowledge you can get on the ground is to actually come with us. Our next trip, if anyone's interested, is at the end of October. Half of us are going to America, half of us are going to Australia. Take your pick, decide where you want to come. But there's no better experience than on the ground. We just closed on this portfolio. It's a $16 million medical portfolio. 7 different buildings, 8.5% cap, financing 4.23%, fixed for 5 years at a 65% loan to value. What was interesting, it was only 89% occupied when we secured it, but by the time we closed, we had a full lease. 38% blue chip tenants with a blended lease of 5.5 years. What's really interesting for me is that we had some of the best investors, both on the ground, in terms of them understanding medical, and obviously Henny and the guys from this side understanding the medical. Now, I'm not going to go into a huge amount of detail here, but you've actually got project briefs if you are interested in more of the numbers, because you can't see it exactly. But we've got different buildings, different places. We've also got, you'll notice here, Bloemfontein. Most of you don't know where Bloemfontein is, which is why there's an opportunity there. So if you take Four Ways and Monte Casino, that's what's happening in Bloemfontein right now, on the corner of the N2. We're putting up a big office park there. We're also putting up manufacturers, which is interesting, Kura, what you were talking about. There's talk of Richard Branson bringing Virgin into Bloemfontein because of it being a distribution hub. So if you want the details, it's all there, it's all online. For those of you interested in Australia, the biggest opportunity in Australia is affordable housing. We're working on ways, from an immigration perspective, for people to be able to immigrate in both Australia and America by getting good investments and ultimately being able to get residency without being able or having to move there. And then lastly, Africa. I wanted to read you something quickly, and then Kura, I'll be done. I wanted to read you something which Jim Rogers said, which I think really sums up the power of crowdfunding. Because crowdfunding is not just about you and me buying medical buildings. It's about affordable housing. It's about helping people all over the world. It's about Project Double the Wealth and people being able to access the wealth in real estate. And this is in his book. He said, "Let not him who is houseless pull down the house of another," said Abraham Lincoln. "But let him labor diligently, build one for himself, thus by example assuring that his own shall be safe from violence when built." If we empower people with real estate, we will not only have a fantastic country, we will have a fantastic continent and a fantastic planet. So I leave you with one metaphor. There's a wave coming. And as Dolph alluded to already, there are 3 different people. The one doesn't even know it's coming. They're driving their ox wagons, they're building their ox wagons. And that wave of change hits them. It changes their lives forever. And to be honest, they don't even know what hit them. The second person is sitting on the beach. They attend conferences like this, they learn the great information, but they don't do anything with it. By the time you see that wave arriving on the beach, it's too late, there's nothing you can do. And the third type of person is a surfer. And anyone that's a surfer, you have to bear with me, I'm a Durban boy, knows that to surf you've got to believe. You've got to get on your board and you've got to paddle to backline before you can even see the wave. And then you've got to bob up and down on the back, waiting. But when that wave comes, you've got to paddle. You've got to paddle as hard as you can because you have to have the momentum to catch that wave. And when that wave comes, it's an amazing feeling because you're not sure if you're going to catch it. But you know if you don't catch it, you're safe because you're at the back line. And if you do catch it, you drop in. The excitement, the energy, the exhilaration. You get to choose whether you're going to ride that wave of change, whether you're going to have fun along the way, and most importantly, whether you're going to make a difference to this planet. We're passionate about what we do. Our vision is to be tomorrow's simple answer for like-minded property investors to create global wealth. And as a gift to you, we would like you to provide you with the surfboards of the future. You'll see that you've got an investment strategy sheet, which is on in front of all of you. If you fill it in and return it to Michiel, who'll be sitting at the back, I've got to stand outside, we'll send you not only a copy of my book, but various reports and videos that you need to be able to read if you want to understand this wave of the future. Ladies and gentlemen, thank you very much for your time. Erwin and Neil and Ned, thank you for having us here. It's been a real honor and a privilege. And most importantly, please go out there and enjoy the ride. This wave is coming, whether you like it or not. Thank you.
As I said, the young man with more energy than I know how to deal with. I think we've had a crackerjack morning this morning. To put a trend through it all is just think about where you are.